Good morning everyone, and welcome to another Our Crypto video. Today's markets have gone down by about 3.6%. We had seen Bitcoin recovering, Ethereum recovering, and the general market recovering, going up by as much as 5 to 10% in some cases. The global crypto market cap on Thursday and Friday were sitting around 960, 970, and briefly touching 980 billion. And we were hopeful that it would go up to $1 trillion, but unfortunately that didn't happen. There were some retracements and the prices fell again, and it's closer now to 900 billion than 1 trillion. Bitcoin's price that was close to 22,000 is now down 4% in the last 24 hours. It's down to 20,500. Ethereum is down by 4. And in general, the markets are in the red, as you can see from here. There are some coins that are in the green, but obviously that are due to token specific factors or because they're stable coins. So the markets are still very fragile. There were some good news in the market that the companies that became bankrupt or became illiquid, such as Celsius, is looking to restructure, and they're hiring lawyers in order to make sure that everyone is paid out. However, the negative sentiment came along when it was suggested that inflation data is going to be worse this quarter. It is said that inflation will touch 9%, and that's not a good sign for the markets, especially because the Federal Reserve has been increasing interest rates in the hopes of decreasing this inflation rate, but it has been unsuccessful till this point. And with inflation rates so high, we are seeing a fear of recession being renewed. And when there's a fear of recession in the market, and when this fear is quite high, then what we see is that people pull back from riskier assets like crypto and put it into more sort of safe assets like blue chip stocks and bonds and commodities in order to preserve the value of their capital. And this is exactly what's happening. And that's why the markets have fallen by almost 4% in the last 24 hours. Looking at the price of Bitcoin, we had seen here that on the 4th of July, the markets made its way up above the $20,000 level. And this positive sentiment remained due to the fact that even though the bears were pulling the prices down, the prices were still hovering above the $20,000 support level. And finally, on the 7th of July, which is about 4 days ago, the prices went well above the $20,000 support level, and it even touched and went above the $22,000 resistance level, going and trying to test or on its way to the $23,000 level. However, it kept on trading between these levels, and with the bulls and the bears testing this resistance level, we saw that the bad news relating to inflation pulled the prices back down and erased all these gains, pulling it down closer to $20,000. And I believe that if there's more bad news that will come into the market, the prices will go below $20,000. However, I don't think that it will trade way below this level. It will trade hovering this level, because if I zoom out, and when it started trading at $20,000, we can see that the average is between this line. It will go above and below, and people are tending to stick to the psychological price point. So Elon Musk cancels Twitter purchase agreement. Tesla and SpaceX CEO Elon Musk has withdrawn his $44 billion offer to buy Twitter. Musk offered to buy the social media platform in April, but a lot of people have been wondering, will he buy, will he not buy? Because he hasn't been making excuses in the last few weeks or last few months. Because he has been making excuses for whether he's going to go ahead with the deal or cancel the deal. And a lot of people are thinking like, Musk is just playing with the markets and he won't actually go ahead with the deal. So the SEC filing from Musk's attorneys have said that Mr. Musk is terminating the merger agreement because Twitter is in material breach of multiple provisions of that agreement, appears to have made false and misleading representations upon which Mr. Musk relied when entering into the merger agreement, and is likely to suffer a company material adverse effect. And what it means is that Elon Musk, when he signed the agreement, he basically said that he was very worried about spam and the activity of automated bots on the platform. He said that account for maybe 5 to 10% of all the active accounts on Twitter, and this is a figure that's too high. And he wouldn't purchase Twitter until this level became low, maybe 1% or so. In order to get more information and in order to make sure that he's making the right decision, Elon Musk has sought the data and information necessary to make an independent assessment of the prevalence of fake or spam accounts on Twitter's platform, which was his main concern. But Twitter has failed or even outright refused to provide this information according to the SEC filing by Musk's lawyers. What they say is that Twitter's latest offer to simply provide additional details regarding the company's own testing methodologies, whether through written materials or verbal explanations, is tantamount to refusing Mr. Musk's data requests. And I can see where they're coming from if this is true, because if you're worried about spam accounts, then the Twitter CEO and board of directors should make sure that this potential investor is going to inject so much cash into the company, is relaxed and has all the information to make a right and informed decision, which Musk's attorneys are saying that isn't the case. So this constitutes a clear legal breach of the terms of the agreement, and according to them, allows Musk to pull out of the deal. Now Twitter is suing Musk for pulling out of the deal. They say that Musk is doing this unlawfully and against the terms of the conditions. So both sides of the table are saying that, no, you breached the terms of the conditions, and the other will be like, no, you breached the terms of the conditions. So I don't know if this is going to go to court, and it's more probable that it will, but it seems like Musk is well lawyered up, and we'll see where this legal battle leads to. And because of this news, Twitter stock price closed the day down 5%, just under $37, but has fallen further in after trading hours to a current price of about $34 per share, which is a clear indication that there is negative sentiment going on around Twitter, and the fact that Musk pulling out of the deal is not good for Twitter, due to the fact that now he is pulling out for reasons X, Y, and Z, and these reasons are all negative. So it puts investors' view into perception that Twitter's spam accounts are taking over, and it's not actually what we thought it was. So looking a bit at Bitcoin and the markets itself, the 200-week moving average causes headaches for traders. At around 20,850, the June 10 weekly close was hardly anything special for Bitcoin versus USD. And it is still hovering at around the $20,000 psychological level. And Bitcoin's ability to hold current levels could be the key in deciding the mood this summer, as relief in global equities would provide an opportunity for crypto to erase some of the losses from recent months. So this statement is quite bullish. It says that if Bitcoin can hold its current levels, and if it can make through without any sort of massive dips, then once the pressure is off the traditional markets, then the price of Bitcoin, and by extent the other cryptos, will start rising again. However, others were less enthusiastic about the markets, noting that Bitcoin had still performed another close below the essential 200-week moving average at around 22,500. In the previous bear markets, the 200-weekly moving average acted as a general support level, with Bitcoin wicking below it briefly to put in macro bottom. So it was seen as a bottom, and whenever it hit that, it went all the way up. But this time around, it doesn't seem to be the case. It doesn't seem to be holding at 22,500. It's gone below it. Now it's at around 20,500, which isn't a good sign for the market, and it's showing that recovery to prices above 25,000, for example, is still a long way. So relentless dollar is back as Asia markets dip. Asian stocks trended down on July 11th as the start to the macro week has clouded by news of social unrest in China. Protesters in China are demanding the release of frozen funds amid a scandal involving both banking officials and local authorities accused of abusing COVID-19 tracking apps, and because of this, markets felt the strain. So this is a socio-economic issue which caused the Shanghai Composite Index to dip by 1.5%, which is massive for the traditional markets, while the Hong Kong Hang Seng Index was 3.1% lower. And prior to Wall Street returning, however, the US dollar index was already making fresh strides, cancelling out a retracement which had provided a cooler end to last week. So the dollar is very strong, actually the strongest it's been in 20 years. DXY was at 107.4 on July 18. So just 0.4 points off 20-year highs seen day previously. And it is a good sign for the dollar. It means that the markets are quite robust despite inflation and all the issues going on. So inflation is tipped to provide a messy week. The US Consumer Price Index readout for June is due July 13th, and expectations are for the monthly figure to be even higher year on year. There are predictions that the inflation will be at 8.8% year on year and 1.1% month on month, which is massive. And also, because of the European gas crisis, there will be a downward pressure on the euro, and it's going to get messy because the markets are going to react negatively to it. And the markets haven't really reacted to it because they're still tending out to see if this will bear out through factors that will lead to these increases in inflation and dips in the euro. And any knee-jerk reaction could definitely spook Bitcoin markets in line with other risk assets. And it can spark major volatility because of this socio-economic unrest. The crypto markets may dip because when such unrest happens and when there's volatility, people tend to pull money away from crypto because it's a riskier asset, and they tend to keep it as cash or invest in assets which will retain its value, like blue chip stocks, bonds, or commodities like gold. However, there is some sort of relief for the crypto markets because the fear and greed index is now increasing. It's still in the extreme fear territory, but now it's at 22. Remember that 2 months ago it was 8. It was extremely low. People were extremely fearful. They didn't even want to touch crypto. But now it's at 22. It's making its way back up, and people are becoming more bullish on crypto, and we are seeing, like we saw here, increases in the price of Bitcoin to 22,000, which signals many bull runs or even nano bull runs, but it doesn't pull away from the fact that the markets are still quite depressed. But all in all, things are quite stable. There are some signs that people's perceptions are changing and they're becoming a bit more bullish on cryptocurrency. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.